Where do you see the best value? Where do you find opportunities right now?
Well, in equities and credit. So we're overweight, we're risk on, we're going in with our eyes open. We know that we'll be tested again next year in terms of news flow on COVID and elsewhere. We like quality and growth when it comes to equity picking. They'll continue to do well. And that puts us into US and China particularly. So we're overweight US and we're overweight to some extent emerging markets in Europe. But China's a real focus because of the composition of its stock market. It's becoming more consumer orientated, and the tech and health is not all entangled in this US-China dispute.
Rick, Tom Keene in New York. Good morning to you. As you know, the Dow Jones Industrial Average is Boeing influenced, up single digit, but we've got solid double-digit performance in SPX and a stunning 40% return in NASDAQ 100. How far behind is institutional global Wall Street? Has it been a year where they just simply haven't performed, or have they enjoyed some of these gains?
I think they've enjoyed some of the gains, but like us, people have been pretty cautious in an environment where the stock market's doing much better than the underlying earnings story. You've got to have some very strong confidence that you'll get an actual recovery in economic and earnings growth into next year. We do have that confidence, but we're tempered by the knowledge that fiscal stimulus isn't there yet. And you've got a complete lack of coordination at the moment between the approaches that different countries are taking. Nevertheless, we think that's the only place to be at the moment, to be in equities, and we've gained from those. And we think some other investors have too.